When I think of small businesses taking credit cards, I usually think of Square. And Square innovated this field of making credit card payments seamless and easy, and currently they're the most popular in my city. And while competition has grown since then, they still remain a popular choice among merchants. Now, 18 months after their IPO, I see they're having trouble with their financials. Initially, I imagine Square being very successful just because, of its popularity, and usually it's a higher preference among merchants. However, after seeing negative cash flow and low gross profit margins, I found where they're going wrong. So first is their revenue. The revenue has some problems which I don't like. It's being squeezed. And what I mean by this is they have fees which are competitive. Now, competitors can lower transaction fees and have a foot up on Square. And the problem is that they already have low gross profit, especially with their primary source of revenue, which is their transaction fee. Now, the second thing is their hardware, and this has negative gross profit. So it looks like they're taking the cost of hardware to provide their software. Their secondary source of revenue, which is their subscription cost and service fees, have a high profit margin. However, it is only 10% of their primary revenue. So the problems I see here is that Square is extremely vulnerable to lower competitive transaction fees. I mean, even with the gross profit margins low, they still have to pay administrative costs. Their positive cash flow comes from the sale purchase of stock, which is another sign I don't really want to see. Their lack of proprietary nature of Square can hurt them long term, I think. There are a lot of competitors for point of sale, and Square is the original brand, but because larger companies can come into the market like PayPal and do something similar, it makes them increasingly more vulnerable to stalled growth. And what I see Square doing in the future is bringing more tools to their software. Now, one of their competitors is Intuit, and they have QuickBook integration, which is an accounting program. And Square needs something more than easy credit card transactions, and I think they can do this. But the problem is, until they reach profitability, it's going to be really costly to invest in new product development. Now, other companies like Apple can also skip a third-party system like Square if they wanted to. I mean, when I usually see Square, it's at a food cart, and it's usually on the iPad. So currently, Square and Apple have a partnership, and Square's point-of-sale hardware is actually sold on Apple's website, which is very good for Square as a company. The business that wants to use Square has to purchase the iPad and then purchase Square's hardware and then pay monthly fees for its software and transaction fees. So Apple, if they wanted to, they can skip this third-party software completely, and they can develop their own iPad that already comes with point-of-sale software integration and also comes with point-of-sale hardware. Even though Apple has not done that, or they even plan to do that, Apple has leverage over Square for this exact reason. So I really like Square. I think they have a really great product. They have issues with the proprietary hardware, and also the credit card transaction fee is not a really proprietary nature about it. And also they don't have substantial profitability yet. Another reason is that they're under Apple's foot, and Apple has leverage over them, especially since the majority of Square's hardware most likely comes from Apple's website. So for me to find Square an attractive investment, I would need to see profitability in the company, and then I would need to see development into more tools that are provided to merchants. So that was the video. If you like to hit the like button. Also, make sure to comment below if you like these shorter analysis videos. This is a test run, and I wanted to see if shorter analysis is a better analysis. I reached my goal of 150 subscribers. I'm really proud to do that, and I really hope we can hit 200 by next week. I think that'll be amazing. And also, look out for this week's video on 3 new stock picks.